Hey guys, this is Ken McElroy, and you are listening to the Mailbox Money Show with Bronson Hill.
All right, welcome to the Mailbox Money Show. I've got my good friend Jeremy Dyer here. He has been doing it. I think he said it took him 15 years to be an overnight success. He has, in the last 2 or 3 years, raised $40 million and just done very well. And really, we talked just about the fundamentals of multifamily investing, why people like it, why people do it, why I love it, why I feel like it is right now actually is a great time to consider getting back in, especially if you have had a deal that hasn't gone well, right? Because there's been with the debt situation, there's been some challenges, but it goes back to that saying from Warren Buffett: "Be greedy when others are fearful." And there's some fear out there, and it's just amazing in our culture now, right? Everything is 30 to 50% more expensive than it was 4 years ago, just when it comes to gas or groceries or other things, a lot of different items, except multifamily apartments in thriving markets are 15 to 40% discounted, right? So why is that? Some of it's the debt and some of it's just it's an out of favor asset. So I think right now we have an asset that we know is going to be in demand. So we have over the last several months really started loading up again. And so anyway, let's jump in this interview. We're talking about what's happening right now in multifamily and some of the positives that we're seeing and why it could be a good time to jump in. So let's go with Jeremy Darrow. Welcome to the Mailbox Money Show. I'm super excited to be here with my friend Jeremy Dyer. How are you doing today, Jeremy?
I'm wonderful, Bronson. Thanks for having me on the show.
Awesome, man. Well, you have some big news coming up, right? We were just talking. Why don't you tell people you had a close to seven-figure job that I thought I fired myself, man. I was making like 250K. You were like you're like next level. So talk to us a little bit of your story, man. I just love what you're doing. And you are like the multifamily superhero. Like you just have all these different hats you can wear and things you can do. So talk about it.
Yeah, I really appreciate that. I've either got a lot of guts, a lot of foresight, or I'm not exactly sure what the heck I'm doing
Glutton for
over here.
punishment. Who knows?
Yeah, exactly. But yeah, no, definitely, for your listening audience that doesn't know me personally, I've walked away from an almost seven-figure day job. That's annual reoccurring W-2 income. Yes, it's also active income. And so within the last couple of weeks, I've been able to step away from that. But really the genesis is why, right? Why did somebody like myself choose to walk away from a secure income, driving that seven-figure, mark year over year? And really, it goes back to a couple decades ago. When I got started in the technology sales space, I went from being that rookie of the year #1 to the #1 guy in the company in all of North America in the technology sales space, and have been so for the last almost 20 years. And so that really enabled my wife and I to be able to sock, some cash away in our 401k plan, and allowed us to have some discretionary income on the side to be able to invest in real estate. Obviously after having paid off our dream home at the ripe old age of 24 years of age and the 40-foot RV sitting in the driveway, life was good, Bronson. And we wanted to get into real estate because I had a passion for it. My wife just happened to have a knack for interior design work. My dad was a general contractor. I mean, we had the team already ready, locked and loaded, ready to go. So 2012 is when we started actively fixing, flipping out of the, kind of out of the aftermath of the global financial crisis. We decided to get in the game, right? And
Yeah.
so we were buying single family homes, fixing and flipping them, and, transitioning on to the next deal, right? But it was really in 2012 that we decided, you know what, that wasn't for us.
Yeah.
Uh, I doubled down on kids, right?
Yeah.
So went from 2 kids to 4 kids, and life was, crazy busy. So in 2015 is when we found passive real estate investing through syndication.
So let's back up for a minute. I love your story, but you were making close to seven figures in a year. Now obviously you're paying a lot in taxes, but that's a good problem to have. A lot of people would say you're nuts. Why would you ever want to leave that? And just, invest on the side. And like, what was the impetus for you? Now you've raised, I think, close to $40 million in the last couple of years. You're just like a rocket ship here, just doing all kinds of big stuff. But what was the reason you wanted to move out of your job? Tell us about kind of the quality of life, or what was the story there?
Yeah, it's a great question. I mean, really, my passion for real estate, specifically on the passive side, really got ramped up back in 2015. So if I can kind of bridge that gap, it'll really kind of help your listening audience understand, why I now got to the point where I can walk away from the W-2. My wife does not work outside the home. By the way, we have no other income whatsoever other than what I've been able to drive through a W-2 and our real estate investments. I have no rich uncles, right? Nothing like that. So in 2015, we got in out of actively managing a real estate portfolio and went passive. So from 2015 is when I made my first syndication investment. At the time, I didn't even know what the word syndication meant, other than I knew the Green Bay Packers were a syndicated football team. Outside of that, that was it. Bronson, I used the shotgun approach with that first deal I invested in. I held my breath, I plugged my nose, and I sent my wire transfer in. Thankfully, it was a good sponsor, right? Best in class sponsor. I then waited, Bronson, for that first deal to go full cycle before I made my second investment. So my second investment wasn't even until 2019. So now if you fast forward the next 5 years, I've passively invested in over 31 deals in multiple different asset classes with multiple different sponsors. I'm receiving, the name of your show, Mailbox Money, right? I'm
Yeah.
receiving mailbox money on 31 in different investments, some paid monthly, some paid quarterly. But here's the catch, Bronson, and this is really why I was ultimately able to exit the W-2, is because 2 years ago, I started letting my friends and family know about what I was up to, because I saw that it could be transformational, not just on the tax benefit saving side of investing in real estate, but I also saw how it could be generationally wealth creating, right? So I started telling friends, family, colleagues, and so forth about the benefits of passive real estate investing. I set up a website to educate. I wasn't partnering with investors at that time, but I was really more using what I had learned in the space to educate others. So it was really just 2 years ago, Bronson, where I was able to start partnering with other investors in my network on opportunities. And the way that the economics, of these deals work is there's compensation that the fund managers or capital partners can earn by partnering with others. And so I
Yeah.
was able to monetize that, through things like due diligence fees and a back end promote that I would receive. And it just got to the point 2 years into it, tens of millions of dollars of capital raised. I now don't really rely any longer on the W-2 because I've effectively completely replaced it, with both my passive real estate investment holdings as well as, now on the active side of partnering with other investors.
Yeah, well, that's great. I mean, a lot of people too. I think that's kind of how it starts, right? It's kind of the gateway drug, right? You start investing a little bit, and if it works out, like, oh, hey, we'll see how this goes. I'm not sure, like you said, white knuckling it, and I'm not sure. Okay, I'm gonna do it. And then you do it, and if it turns out well, I mean, it can be awesome. And I think that for a lot of people, that's been their experience, right? That they just get started. Well, I got started, and here's what happened, and it is amazing. It really is the idea. And for me, this is the big appeal of passive income, is that, the idea of making money while you sleep, right? That you could do this job, you could do it, probably for years and years. Now I want to go back to the question. You started doing passive, then you started obviously getting more active. Because obviously you didn't need to. It sounds like it was when I was in medical sales, it was quite a hustle. I was working pretty, solid hours, a lot of pressure, those calls from the manager. Hey, you're going to sell more widgets. How's it going over here or whatever. And it sounds like you had done a great job. Also probably had a great territory. There's probably a lot of things that were positive for you as well. But what was something that, you decided, hey, I'm not going to miss this when I leave, or, I'm not going to let the door hit me on the way out here.
Yeah, it's a great question. So, I really had a good thing going, right? Had built up an enormous amount of connections, in the technology space. Others referred to me as the go to the industry, right? And so it was really very difficult for me to walk away from, not because of the paycheck, right? Not because, I was excited or thrilled for the next, dealer opportunity, but it was really the people, right? Genuinely, loved the people that I work with and really enjoyed that part of it. But at the same token, I was getting tired of the grind, right? It's a grind for any of your listening audience that maybe has a sales background or a technology background, right? Every single day is a grind. Every month
Yeah.
has a new quota, every, quarter, year, et cetera. And so really, I found myself really kind of chasing after the next commission check, right? Chasing after the next bonus, chasing after that next carrot. And I was, quite frankly, Bronson, I was ready to step off that hamster wheel. I was ready to do something, with kind of what I would call Jeremy 2.0, right? The next phase of Jeremy's life in my mid 40s. I'm ready for that next challenge now. And that next challenge for me, Bronson, is I have fallen in love with real estate. I've fallen in love with helping other investors, achieve that generational wealth that you and I talk a lot about. the tax benefits and the diversification and, the mailbox money, right, aspect of it. So I really do, enjoy, speaking with other, potential investor partners, as well as working with people like yourself, other fund managers or other capital allocators, in the space, that are doing really well. How can we all help each other, in the space, become better versions of ourselves?
Yeah, yeah, it's huge. No, it's amazing the collaboration. I think that's one thing I realized going from single family to which I did for a number of years, and then moved to multifamily. Is like it's such a team sport, and so there's a lot more to it, and that's really the thing too. I think that the difference between being active versus passive. Active, you're still, even if you have a property manager, you're still kind of doing a lot of the work, and if you have houses, and it doesn't really usually generate as much cash flow as you like. And I think a lot of us have that revelation, like this isn't really quite getting me where I want to go, and that's where working with larger deals, it can just make so much more sense. It's so much more efficient of an asset. It really can produce a lot more. And then we branched out to do things beyond real estate to private businesses and other sorts of oil and gas and other things that have tax benefits as well. Well, let's talk for a little bit about, I guess, for your experience, you've worked with a lot of people, just, like we have, where, they're kind of new to this, right? They don't really understand, they understand some of the basics. Everybody understands kind of real estate in general, and they understand kind of how it works. But how, I guess for most people when they're starting out, is that the experience of most people that you found that they have that kind of white knuckling moment where like, I don't know, what is this? Sounds kind of crazy. And then they hit the send button. And it's kind of like a lot of work to get to that point to actually invest in the first deal.
Yeah, you brought up a really good point, and it still shocks me today, having largely really only been, in the private equity space, as a back to an active investor again for the last 2 years. It shocks me how many people are unfamiliar, with the fact that there are alternative ways to invest outside of Wall Street and into Main Street, where you're not actually the one that's having to actively manage the business, whatever that
Right.
business is. And whether it's oil and gas or it's multifamily or any other asset class, at the end of the day, most people that we're looking to partner with are really predominantly those people that don't have additional bandwidth, in their
Yeah.
schedules in order to be able to allocate towards, growing a business, whether that's a franchise business or whether that's, buying, the distressed, single family asset down the road, fixing and flipping and renting it out, right? The truth is that most higher net worth individuals and busy professionals just don't have the margin in their lives in order to do that, because they're trying to be a good spouse, a good father, mother, et cetera, right? And so it's really, for me, the gap is really on the education side and creating awareness, right? And that's why I love people like you, Bronson, that, you write a couple of books, you're creating awareness, you host a podcast, you write a blog article. I mean, you're really trying to get out there in front of as many possible people as you can to say, hey, if Wall Street isn't necessarily working for you, or you're looking to diversify outside of Wall Street into something that's tax advantage, produces consistent and regular cash flow, like real estate, like oil and gas, like some of these other investment options, then really the next thing you need to do is you have to get educated, right? And to get
Yeah.
educated, you have to find people like Bronson or myself, or you have to find books to read or podcasts to listen to. People oftentimes ask me, Jeremy, how'd you go from 0 miles an hour to 100 miles an hour in the space? I'll tell you, I have a lot of mentors, but I didn't pay for any of them. And they all don't even know that they're my mentor. Well, wait, what do you mean by that? Well, that's because I have earbuds sitting in between my ears, the 6 inches between my ears, right? I consume a lot of content from other people that are putting their messaging out there. They're teaching me, right? I don't
Yeah.
need to spend $1,000 to go listen to somebody, give a presentation, during a conference or a master class, because more than likely anything that that individual shares at one of those events has likely already said the same thing as a guest or a host on a podcast, right? And
Yeah.
so I'm a big supporter, new investors need to get educated, and they need to find someone like you or like me that can come alongside them and continue to educate them on the things that they need to know in order to be successful when it comes to that first investment opportunity.
Yeah, and that's very well said. I think that for a lot of people starting out, really the gap is the education, and a lot of there's a networking component of that as well, right? We can learn from books. Last year I was able to read 98 books. I'm such a nerd, but that's how we learn. That's how we grow. I mean, podcasts, all kinds of conferences, different things. But I think that it's the people that actually take action and they start moving towards it. Everything is weird until you meet somebody who's been doing it for years. And then you realize like, oh, wow, this real estate's a pretty big thing. There's like so many niches here. And the more longer I'm in it, the more I like find out about things I didn't even know about. Right. So there's things that are really, really powerful. So I think for most people, it does start with education. I think it's interesting. Our background, both of us, really is sales, and really great sales. It's not salesy, people that want to raise capital. It's not like you just go out, and somebody asked me one time, how many calls do you make when you have a new deal? And I was like, zero. Like, I don't really make calls. I just try to educate. And then somebody, people will reach out, and then I follow up some of those after they reach out. But I'd rather be somebody who's a farmer than a hunter. I don't want to be, everybody wants to buy, but nobody wants to be sold. So how do we do that in a way that's high value and high trust? And I think for a lot of people that's the one thing I realized when I got a lot of value out of someone in the industry that I ended up working with. I was like, wow, I feel like I spent all this time and got to know this person. I think there's a lesson there for people that are passive that want to learn, is just to keep educating yourself and learning, and then don't get stuck in paralysis. Like, take the action. Don't get stuck there. Take the action. But then also for people that are on the education side, is just keep putting stuff out there, and continue to add value and try to find new ways to do it, because it's that important, and you build trust as you educate. So I think it's really awesome. What are some ways? Let's talk for a minute about just real estate right now. I know you've been in this for a while. We've seen obviously rates have risen the last few years pretty sharply. We had a couple of deals really struggle because of that. And then, we've seen them start to, come down, or they say they're starting to drop them. That'll of course have a positive impact, we hope on real estate. But what's your kind of short and long-term view of particularly multifamily or other real estate that you guys are involved with?
Yeah, no, I appreciate that perspective. And so I've been involved as a limited partner investor since 2015. So I'm coming up on that, 9-10 year period, right? And it's amazing what has happened in a decade-long experience. I mean, if you think about what we've gone through, as a country just in the last 10 years, it seems like those black swan events are happening more frequently, right? The most recent one, obviously, being, with the historic increase in interest rates. Just prior to that, we had COVID, right? Kind of just prior to that, we were still kind of coming out of, the global financial crisis. And even in between there, everybody was screaming recession back in 2016 and 2017. Well, if you got out of real estate, or you stayed on the sidelines from 2016, 17 until 2020, 2021, you missed on a 5-year historic run up, right?
Yeah.
And so I don't have a crystal ball. In fact, the one that I used to have, it seems to get blurry every other day. So I stopped kind of looking at it, right? And so I personally believe that there's opportunities to invest in real estate, invest in oil and gas, invest in other asset classes, really at any stage of the economic cycle. Okay. The truth is that the deals that I invested into in 2021 and 2022, okay, as a personal limited partner investor, which are, at least 15 deals, they're not going to perform as well as the deals that I've invested into in 2023 and in 2024. Well, why is that the case? Because again, those deals in 21 and 22, valuations were at a historic high, right? Depending upon the market location, those valuations in those markets have regressed 20 to 30%, right? Cap rates have expanded during that time. The debt structure obviously looks a whole lot different now than it did when the sponsor acquired those deals, using a 3-year floating rate bridge loan with hopefully a low in the money interest rate cap, right? So those 2021 deals and 2022 deals, I think at the end of the day, time has a tendency to heal all wounds, so long as the debt structure is structured properly, and so long as the sponsor is really forcing that value add appreciation element, and ripping through the renovations if it happens to be a value add deal, on time, on budget, those types of things. But the deals that I've been personally investing into in 23 and 24, and the ones that we've been partnering with investors on, we're seeing deals at a 20 to 30% discount from what they would have traded for just 3 to 4 years ago, right?
Yeah.
We're only really finding deals, honestly, right now, Bronson, where there is a significant amount of distress, whether that's operational distress and or financial distress. Those are really the only ones that we're personally seeing right now, that are penciling. However, the tide is now turning again. Okay. I
Yeah.
don't know exactly where we're at in terms of the next economic cycle, but it feels like, at least from my perspective, it feels like the bottoming of the market occurred in 23 and 24. And we're now getting to the point where, interest rates are coming down, at least from a Federal Reserve perspective, not necessarily the treasury markets right now, but I think the treasury markets are probably pricing in what's going to happen on election day, quite
Yeah.
frankly. But that's really where we're at right now. So what does the future hold for real estate? Maybe you have that crystal ball, Bronson, that I've been looking for, but I'm not quite sure. But I know one thing's for sure, and that is I'm going to continue to dollar cost average, and I'm going to buy into, invest into some opportunities that are maybe higher in terms of the peak of the market. And obviously, I'm going to continue to double down, during times where, the market isn't quite where it had maybe been historically.
Yeah, it's a great outlook, great summary as well. Yeah, I mean, I think very similar. We saw valuations being higher. Everything right now, if you just look across, food prices and gas prices and other things. I mean, things are generally 40-50% higher than they were 4 years ago in just about everything. I mean, of course, energy and other things leads to everything, but multifamily apartments, for some reason, even in booming areas, are discounted, 15 to 40%, right? So it's like, how does this make sense? But again, it's because of the debt, and there's other, again, we went from a very in favor asset that if you owned multifamily between 2010 and 2021, you were a genius just for owning it, right? Even if you did a bunch of stuff wrong. But now it's become that, obviously, with things changing. But I think that we have an asset we know there's going to need to be a lot more of. There's no technology in the foreseeable future that does not involve a roof over someone's head or a bed for them to sleep in, right? There's nothing out there that's like, we know we're going to need more places to live in, and we're still a growing population. So I think it's very interesting. How do you recommend managing risk when someone's looking at a deal? Obviously, there's no crystal ball to know what deal is going to go well or what isn't going to go well. But what are some things you look for from a risk management standpoint?
Yeah, it's a great question. And that really hits down to the most important thing that investors need to look at. And that is, who's the sponsor, right? Who is the sponsor and their team that's ultimately responsible for, managing that value add business plan over the course of the deal cycle? Because I'm personally not doing it. You're probably not doing it either, right? We're partnering with another sponsor that's in the space that we've properly vetted out, that we know, like, and trust. We've personally deployed our own capital with them in the past. We may or may not have had deals with them that have gone full cycle. We're able to really take a look at their transparency in terms of how they communicate, with investors. And all of that's important. Why? Because at the end of the day, that pro forma is going to change the day after they buy the property. Okay. No pro forma ever stays the same. Okay. There are very simple ways, though, that investors can, do their own due diligence. Even novice investors can just simply ask themselves the question: if I'm investing in a multifamily value added opportunity where maybe the property was built 40 years ago and the plan is to renovate those units, can that market actually afford it? Right?
Mhm.
Can the market that the sponsor is targeting acquiring an asset, can they push the rents from $1,200 to $1,500 per unit in that market? Will the market actually support it? Can the people that currently live there today, can they afford that bump, right? And there's a couple of very simple ways to do that. Obviously, looking at other single family home prices in that area. What's that delta between the cost of single family home ownership versus renting? Let's take a look at the competitive landscape in that market. What are some other properties that are within a 5-mile radius that have similar amenities, right? That are similar vintage, or maybe have already been fully renovated. What do the rents look like in that particular market? But another big one is obviously the way in which the sponsor chooses to structure the debt. And the debt really needs to be structured around what the actual business plan is itself. If I'm investing in a ground up development, build to rent opportunity, for example, one would expect that the debt structure on that deal is going to be more of a fixed rate over a longer term period through an agency debt financing, Fannie, Freddie, for example, right? But if it's a bridge loan, which everybody, historically in the last few years is scared of floating rate bridge debt, which is obvious because a lot of sponsors have gotten in trouble in the last couple of years with that type of strategy. Well, how is the sponsor de-risking for the investors the potential of continued fluctuations or increases in the cost of debt in the future, right? And there are ways that the sponsor can do that. And there are ways that the investors can at least feel comfortable that the team that they're investing with, is taking on their number one biggest priority, and that is protecting their investors' capital through that fiduciary responsibility they have to do so.
Right. No, that's really great questions to ask and things before you get involved. And of course, that you said the desk structure sure is critical. Let's talk. I wanted to just ask you before we wrap. I want to talk to you about your book. I know you have a book. It's a lot of work to write a book. Tell us about the title of your book as well as what it's about and when people can expect to see it.
Yeah, I appreciate that, Bronson. So the name of the book is The Fundamental Investor, and it really is written in more of a storybook format. I wanted to really try to do what I could to captivate the listening audience. There's wonderful books out there on the topics of, private equity, real estate investing, and alternative assets and so forth. You've got some great ones out there as well. But I really wanted to try to craft and create a story, really, which is really my genesis from, when I was very young all the way through now up in my mid 40s, in terms of what that journey for me has looked like. The mindset, that I was taught from my parents, my financial advisor over the years, to that ultimate transition into learning the business by actively owning real estate and being kind of that landlord, to the eventual transition into passive real estate investing. And really, what does that mean for the novice investor that's not ever, gone through subscription documents? Maybe they've never even, sat on an investor presentation before, really arming them with the information that they need in order to feel educated about the process. Because you and I both know it's really important for investors not to invest based on emotion, but really to invest more so based on logic and fact. And it's incredibly important for investors to really truly understand, the type of risk that they're taking when they choose to send that wire transfer in on the next opportunity.
Yeah, that's great. I mean, those are all very relevant topics for investors and things that we need to know. And it, like you said, it reminds me of the famous coach, John Wooden, who was like, it comes down to fundamentals, right? He won, was it 8 or 10 championships or something, NCAA championships, with 100 schools. And he, UCLA coach for years, legendary guy. And he said for the first part of the first practice, he would say, guys, I'm going to teach you how to put on your socks. And he would literally show them how to put on their socks so they didn't get a blister, right? Because you get a blister, you're out, or you get some sort of footage. So it comes down on just the fundamentals of things. And a lot of players went back and said, those are the things that really carried me through. So I think stories are great. I think you really making sure that people can, really make sure that they're coming from a solid standpoint is good. And of course, you learn along the way, and you're never going to do it perfectly. But awesome. Well, Jeremy, you are a super inspirational guy. I look up to you, and I'm excited to spend more time with you and for what you created. And I'm excited to read your book as well. How can people reach out to you and connect with you and follow what you're doing?
Yeah, great. Appreciate that. You can connect with me on LinkedIn. I'm relatively active out there under Jeremy Dyer. You're also welcome to connect with me at jeremy@rise48equity.com. Again, that's jeremy@rise48equity.com. And feel free to check out my book as well. You can head over to fundamentalinvestor.com. Again, fundamentalinvestor.com.
Awesome, brother. Thanks, man. Appreciate you. Look forward to catching up soon, man.
All right. Thanks, Bronson, for having me.
All right, great interview here today. A lot of fundamentals, a lot of great stuff. Also, I'm excited to check out Jeremy's book. Encourage you to check that out when it comes out. He gave some ways to follow him. You also check out in the show notes below. And if you haven't joined our investment club, like I said, we're doing some amazing deals in real estate, outside of real estate, oil and gas. We've got an amazing business, an e-commerce business we're working on right now. I don't know if it will be offered to every investor. We might have some large investors that will take the whole thing, but we may offer it and have some spaces for amazing investors that's high cash flow type situation. So anyway, I'd love to know what you thought about this episode. Would love to see also who you'd like me to interview. But thanks for taking the time to educate yourself. Look forward to seeing you on the next episode of the Mailbox Money Show. You've been listening to the Mailbox Money Podcast. For more free resources, articles, and videos, go to bronsonequity.com. There you can download your copy of the special report, The Single Best Investment Strategy During and After a Pandemic. None of the information shared here is an offer to buy a specific investment, and this is for educational purposes only. Consult your financial, legal, and tax professionals and use your own common sense before making any investment decisions. Thanks for joining us, and be sure to tune in next time for more Mailbox Money.